When you think of insurance, what comes to mind? For most people, it's a necessary evil. Something you pay into every month, hoping you'll never really need it, but also knowing that one accident, one fire, or one diagnosis could make or break your finances. But pet insurance, that feels a little different. It's marketed as something heartwarming, a safety net for your furry best friend. Ads often show wagging tails, bright-eyed puppies, and promises that no matter what happens, your pet's health is covered. That's why the recent case against Trepanian, one of the biggest names in the pet insurance industry, is so striking. In August 2023, the Washington State Office of the Insurance Commissioner announced that Trepanian agreed to pay nearly $4.7 million in restitution to thousands of policyholders. Why? Because regulators found the company had violated insurance laws repeatedly for years. And when we dig into this case, we don't just learn about one company making mistakes. We learn about the darker side of pet insurance as an industry, how it's regulated, how it markets itself, and how ordinary pet owners, who just wanted the best for their animals, ended up footing the bill. Let's unpack this. First, a little background. Trepanian is based in Seattle, Washington, and it's been a giant in the pet insurance world for years. It was founded in 2000 by a man named Darryl Rawlings, who said his goal was simple: help people afford the best care possible for their pets. Trepanian grew quickly. Unlike many smaller insurers, it had a unique setup. Veterinarians could even be reimbursed directly at checkout, instead of pet owners waiting weeks for a claim. That made it sound more like health insurance for humans: seamless, fast, and responsible. By 2022, Trepanian was reporting billions in revenue and insuring hundreds of thousands of pets across the US and Canada. On paper, it was a success story, but here's where the cracks started showing. According to Washington state regulators, Trepanian had been violating multiple state insurance laws going back as far as 2015. These weren't just small slip-ups. The Office of the Insurance Commissioner described systemic issues in how Trepanian ran its business. The biggest issue? How the company advertised and sold its policies. Investigators found that Trepanian misled customers with its marketing. Some ads suggested it offered coverage that wasn't actually included in the policies. Others downplayed exclusions, those fine print details that tell you what's not covered. For example, like most pet insurance companies, Trepanian doesn't cover pre-existing conditions. But regulators said its marketing sometimes blurred that line, leading customers to believe they were more protected than they actually were. Another problem was how Trepanian handled waiting periods. Typically, when you sign up for pet insurance, there's a short waiting period before coverage begins, often a week or two. That way, people can't sign up after their pet is already sick or injured. But Washington investigators said Trepanian misrepresented how these waiting periods worked, leaving policyholders with nasty surprises when their claims were denied. And it didn't stop there. Regulators also said Trepanian sold policies through people who weren't licensed insurance producers. In other words, unlicensed sales reps were signing people up for legally binding insurance contracts. That's a big no-no in the insurance world. What did all this mean for customers? Thousands of Washington pet owners believed they had coverage for emergencies, only to find out, in heartbreaking moments, that they didn't. Imagine standing in a vet's office, being told the surgery your dog needs isn't covered, even though you thought it was. That's the kind of real-world impact these violations had. After a lengthy investigation, Trepanian reached an agreement with the state. In August 2023, the company agreed to pay $4.7 million in restitution to more than 32,000 policyholders in Washington state. It also agreed to make significant changes in how it operates. For context, restitution is different from a fine. A fine is a penalty paid to the state. Restitution is money paid back directly to the people who were harmed. In this case, thousands of pet owners will get refunds for premiums they paid under misleading or improperly sold policies. Now, you might be wondering, how does something like this go on for 8 years without being stopped sooner? Part of the answer is that pet insurance itself is still a relatively new and lightly regulated industry in the US. Unlike human health insurance, which is heavily controlled at both state and federal levels, pet insurance falls into a gray area. It's treated as a type of property and casualty insurance. Basically, the same category as car insurance. That means oversight has historically been patchy. Some states keep a close eye on it, others barely look at it. Until recently, there wasn't even a standardized model law for regulating pet insurance. It was kind of the Wild West. In fact, it wasn't until 2022 that the National Association of Insurance Commissioners, or NAIC, finalized a Pet Insurance Model Act. This model law lays out things like disclosure requirements, definitions of pre-existing conditions, and rules for training people who sell policies. States are now in the process of adopting it. Washington, interestingly, is one of the states at the forefront of enforcement, which explains why Trepanian was hit there first. And this Trepanian case is just one example of a bigger problem. Many pet owners don't fully understand what they're buying when they sign up for insurance. Let's pause for a moment and look at the numbers. In 2022, North American pet insurers brought in over $3.5 billion in premiums. That number has been skyrocketing every year, thanks to what's often called the humanization of pets. More and more people see their dogs and cats as family members, not just animals. And when you love your pet like family, you'll pay almost anything to protect them. Insurance companies know this, and they market accordingly. Commercials emphasize peace of mind, financial security, and unconditional love. But buried in the fine print are exclusions that cover everything from hip dysplasia to dental work to chronic conditions. This isn't unique to Trepanian. Across the board, pet owners have reported frustration with denied claims, rising premiums, and vague contract language. Where does that leave us? On one hand, Trepanian being forced to pay nearly $4.7 million in restitution is a win for accountability. Thousands of people will get their money back. The company will have to change its business practices. And the case sends a message to the rest of the industry. You can't just market your way past the law. On the other hand, this story shows just how vulnerable pet owners still are. The industry is growing faster than regulators can keep up. And most people, understandably, don't want to wade through 40 pages of insurance policy language before deciding how to protect their pet. What can we learn from all this? First, if you're a pet owner considering insurance, read the fine print. Look specifically for exclusions, waiting periods, and rules about pre-existing conditions. If something isn't clear, ask before you sign. Second, check whether the company is licensed to sell insurance in your state and whether the person signing you up is a licensed insurance producer. It sounds obvious, but as we've seen, even big companies sometimes cut corners. And third, keep in mind that insurance isn't the only option. Some people prefer to put aside money in a dedicated savings account for vet expenses. It doesn't provide the same safety net as insurance, but it also avoids the risk of denied claims. As for Trepanian, the company has said it's committed to making things right and following state law moving forward. Time will tell if that's true, but the larger takeaway here is that industries built on love and trust, like pet care, are not immune to the same problems we see everywhere else. Where there's money, there will always be mistakes, loopholes, and sometimes outright exploitation. The story of Trepanian's $4.7 million restitution isn't just about one company. It's about how much we value our pets, how far we're willing to go to protect them, and how important it is to hold powerful businesses accountable when they fall short. Because at the end of the day, this isn't just about money. It's about families. Families with 4 legs, fur, and unconditional love, who deserve better than fine print and broken promises.